All right, guys, welcome. I'm Bryan Chavis, best-selling author of Buy It, Rent It, Profit, and soon to be released. Simon & Schuster will be releasing my next book, The Landlord Entrepreneur, in September of this year. Wanted to address some of the questions from last Tuesday's event. We were proud to hold our first landlord certification program in many years in our hometown of Tampa, Florida. Huge attendance. City of Tampa, flagship title. Thank you for coming out and sponsoring the event. City of Tampa, thank you for participating in the event as well. So let's get right into it. People are asking me all about the 5 phases of property management. Got a ton of questions. I have a ton of coaching calls set up, and a lot of it revolved around me. Individuals wanted me to go more in depth about property management in the 5 phases. Let's first address how I view property management. And I think many people probably seen the advertisement for this event and said, at the end of the day, I'm not really interested in property management. If you're a real estate investor, you should be very interested in property management. Property management is real estate investing. To me, they're one and the same. I can't really be a great investor without having the strong foundation of property management. As the property management goes, so the property goes. At the end of the day, if you talk or speak to any venture capitalist, they'll tell you it's not the horse we're concerned about, it's the jockey. When we evaluate or invest in a business as a venture capitalist organization, we're actually, the first thing we do is we evaluate the management team. Poor management team, they can forget about getting an investment from the venture capitalist. So it's really all about the management. It's the same thing applicable to real estate investing. If the management is poor, then at the end of the day, the ability for the asset to generate value or income is going to be extremely difficult. When you're dealing with lenders and you're looking for financing, you're looking for a group of investors, someone on that team typically has to be strong in property management. Even if you're going to outsource property management, how can you truly outsource if you don't really understand? Think about it. If you don't really understand property management, how can you outsource? Many of us are outsourcing to individuals who have the best website, the best SEO systems in place, the best looking flyers, business cards, whatever. At the end of the day, branding does not manage properties, people do. And there has to be some kind of substance behind that brand power. Branding is important, don't get me wrong, but there has to be substance. The individual our firm has to know something about property management. So what are the 5 phases? Acquisition, implementation, stabilization, growth, and exit strategy. Those are the 5 phases. Let's start with acquisition. Acquisition is all about buying the property. Most of us buy properties from an income approach, meaning we're scrutinizing the net operating income. So to be able to do that effectively, at the end of the day, you really have to forecast values. And how we forecast future values, you learned about that, the COTA process, strategic evaluation of a target area. We talked about looking at building permit activity, unemployment, average household size, unit mix, etc., etc., etc. These things help paint a picture of a demographic. Once we paint a picture of a certain demographic, then what we do is we look for housing for that particular demographic that we feel is in need of affordable housing or rental housing in general. Then we forecast the rents. We do that by looking at the 10-year treasury. We do that by, of course, in the 10-year treasury is the key indicator to tell us where interest rates are going and where they're headed. You look at the yield curve and you're able to make certain predictions on interest rates based on the yield curve. You're also able to predict certain recession environments by looking at short-term peaks and long-term peaks. And when short-term spikes over long-term, then you can kind of predict certain recessions. So there's a lot of moving pieces, a lot of complexity to predicting net operating incomes, which ultimately means predicting future values of the investment property. Very tricky, especially moving forward in the environment that we're in, because in most cases your exit cap rates are going to be higher than your entry cap rates. So you really have to understand how that's going to affect the real estate investment in itself. And at the end of the day, if you have a poor property manager who's not setting rents, who are not stabilizing the property, which means maximizing income and minimizing expenses, you're going to be caught up in softening NOIs and ultimately leading to erosion of values of the asset. So it all basically, again, falls on the property manager and how good a management team is actually dependent on the value of the asset at the end of the day, especially moving forward in this environment with the interest rates rising. You really have to have a strong operational team in place, property managers in place. Even with single family homes, it doesn't matter what you're renting, single family, apartment buildings. At the end of the day, single family, you better know this, even more, because at the end of the day, you only have a break-even ratio. We spoke about that a little bit in class. So there's not a lot of flexibility. You can hide a lot of mistakes in critical mass, economies of scale, apartment buildings. So, you just want to make sure your management team is in place and is strong, and you're dealing with a good property management company that can provide those type of services to you. Moving from acquisition into implementation. Really, implementation is all about systems. Check and make sure your property manager has the right type of systems in place that are able to operate in any kind of environment. Again, like I said, we see the environment changing over the next 3 years. Your property manager needs to know what type of systems need to be in place, what type of tweaks need to be made on your property. They need to be proactive, not reactive. So systems are extremely important. There's 2 types of systems: hard systems and soft systems. Hard systems are typically your property management software, and the soft systems are the procedures manuals. Ask your property manager, can I see your procedures manuals? Can they produce procedures manuals? If they can't, at the end of the day, that's probably not a property management company you want to be dealing with. Moving from implementation in the systems, you're moving into what we call stabilization. Can't really stabilize a property, which is maximizing income, minimizing expenses, without implementing the proper systems in place and having the right type of team in place. So one system or one phase impacts the other. So moving from implementation into stabilization, which is maximizing income and minimizing expenses, is typically done through having strong systems in place. And then once you stabilize a property, and the stabilization could be ongoing, depending on the economic climate where your properties are located. Sometimes stabilization is a monthly occurrence. You're always trying to stabilize and juggle net operating incomes, vacancies, maintenance issues, and things like that. All this depends on the type of property that you're operating. Class A to Class C type properties, what type of location are they in, what submarkets are they in. All these are indicators that play a factor. So once we stabilize a property, we move in what we call growth phase. Growth is really trying to add value to the net operating income, add value to the property itself, and then look for an exit strategy. And the exit strategy is determined by the group of investors, our investor, and their individual goals with the property. So hopefully this helped you get a better understanding of the 5 phases of property management and really the 5 phases of real estate investing. Stop thinking of property management as the stewardship mentality, the individual that runs and fixes a leaky faucet, puts a notice on the door to evict a tenant when they haven't paid rent, the guy that's running around trying to collect rent. That's not a property manager. A property manager is actually someone who's highly skilled, or should be highly skilled, in real estate investing. At the end of the day, that to me, the greatest tool that an investor can have or utilize is that property management tool and understanding the industry of property management. So hopefully this helped. If you have any questions, please visit us on social media, ask your questions. Visit me at thelandlordacademy.com. Set up a free profile so we can interact with each other. Visit us at Chavis Realty if we can be of service to you at chavisrealty.com or Chavis Realty in general. We would love to help you with your property management needs. For all of your education and training needs, please visit thelandlordacademy.com and take some online training. Really immerse yourself to what this industry has to offer you, and learn how to use property management as a leveraging tool to participate in deals and to grow a 6-figure business in property management. So hopefully this helped. I look forward to speaking to you and seeing you all soon. I will be doing and answering questions once a week moving forward, and hopefully we will see you at our next landlord certification event in the city of Tampa. Take care, be blessed.